So today we'll be looking at the Forex terminologies, and we have here PIP, pipette, spread, bid versus ask, buy, sell, bullish, bearish, lot size, volatility, liquidity, drawdown, equity, balance, leverage, broker, swap, candlesticks. So you can just pause through this to catch the definition and understand that the terminologies in Forex are very important, because you need these things not just to make profit, but you want to be able to communicate effectively. You won't be making profit in Forex, and when someone is speaking the language of Forex to you as a trader that you are unable to answer them or respond intelligently. So I'll just go through this again so you can pause as you have the definition right on the screen. So on the explanation through the video you'll be watching, we explained the PIP, pipette, spread, bid, ask. We've not touched the buy and the sell. Okay.
Yeah.
Cool. So this is what you saw on your MetaTrader. Did you open your chart yesterday?
I opened it.
This part, right?
Yeah.
Good. Now you would see some of these stuffs here. These charts, but you might not understand these numbers. Now these numbers are the price change, and this line, you see it's moving actively along this place. So when it's moving up and down, it is printing the chart, and you would see the chart actively printing from maybe at this point, as you see here now. It is printing. If it goes up, the candlesticks form. If it comes down, candlesticks are forming. So we are not looking at maybe the formation of the candlesticks now. We want to look at what this thing mean, this line, or rather the price itself. The PIP, the pipette, the quotation or the quote of a price, they are all inside this number that you see. Now I would write this out: 1.36580. Don't mind my handwriting now, mouse. Okay, this is what we have inside here. You see it, right? Now the PIP and the pipette would affect the quotation of this price. So where is the PIP within this price? This is the PIP. 5858. Here is the PIP, and I would now give you a definition of the pipette. Then we'll come back to this chart. So don't worry, I will still explain more. Okay, so what is a pipette? Write the definition.
It's not what we just did before. Okay, pipette. Okay, yeah.
Pipette. No, good.
We did the PIP before.
Now, so a pipette is a fractional PIP representing 1/10 of a PIP. A pipette is a fractional PIP representing 1/10 of a PIP.
Representing
1/10 of a PIP.
1/10 of a PIP.
Of a PIP.
Okay.
So for us that just joined, you're welcome. If you have your pen and paper, just write down. You might not catch it, but you will catch it. I promise you that. So the pipette allows for a more precise pricing. You might not write this down, and the brokers, they make use of the pipette to give either a wider range of spread or a tighter spread. So now I made mention of spread, and number 3 is the spread. What is
Yeah, number
the
3 is
spread?
spread.
Yes. What is a spread? First, let's go check what the pipette is, since we've called it a fractional pip representing 1/10 of a pip. So it would make sense when we now explain on the screen. So this is the pipette in this number, the 0 here, like a baby pip, pig, piglet, eagle, eaglet, pip, pipette. Okay, so 1/10 means that this thing will count 1 to 10 before it affects a number here, before it affects the pip. It will count 1 to 10 and then it affects the pip. The pip would count 1 to 100 before it affects the currency. This is the currency. And inside this currency now, we have, I will clean this line. We have here this and this. This is the cents. This is cents. Don't mind my writing now. And this is dollars.
Dollars. Okay.
Yeah. So this is telling you, depending on the currency that we're looking at now, this is a chart of maybe Euro USD. It simply means that one. Okay, let me write it down, because if I just call on light, I'll still confuse. Euro USD. So these things, they trade in pairs, but on the chart you won't see it divided like this. But let me put that line just to show the difference: Euro and USD. So this is the base. This would be the base of a currency pair. Did I even mention currency pair in our terminologies?
No.
I didn't. So currency pair, you can put that as number 20. Should be the first.
Number 19.
Okay, 19. Good. Quotes. This is the quotes. So, like I said, as we keep,
Number 19 to be currency pair, right?
yeah, just use right currency pair there. So here we have the base and the quotes. Now, the quotes, the base is not here. These numbers is simply a quotation to, let's call the chart the base. We are looking at euro, and the price around here is telling us what the euro is actually being rated in the dollars. So we say 1 euro is currently $1.36. You get it, right?
Yeah.
Good. So now let's take out all these things on the screen, maybe these ones. Then I would look at this. If this counts upward, 1, 2, 3, 4, 5, 6, 7, 9, and it comes back to 0, what will this number become?
9.
9. Beautiful. Then if this, let's assume that this was 2 here, and then it counts down and says 1, 0, and as it's coming to 9, what will this change to?
7.
7. You understand it, you're catching it. So if this chart is going downward, this will be counting downward. The pipette is counting downward when this chart is going down. Sorry, let me remove my ringing tone. Then if the chart is going upward, your pipette is counting upward, so it's affecting your price upward. If it's counting downward, your price will be going downward. Okay, let's see how this plays out here. So look at this chart, and then you should be able to see that the price, I think it's reducing downward 540, 500, 460, 420, 380. So it's going downward. Okay, now we've been able to understand the pipet affecting the pip. Let's now look at the pip. This will change to 9 and it adds to itself, which would be 6. So if this changed 9 and goes to 0, this would become 60. Yes, because it will now have 0 here. So let me use another pen here. So if this counts up, this will become 6 and this will become 0. If it counts upward again and it hits 9, this will become 7. Good. And this 0. So if it's counting downward, you already understand it, but let's just still play around it. If it's counting from 8 now, 8, 7, 6 to 0, what will this become?
4.
Great. You've got it. So when this counts from 58 now, or let's keep going down. Let's keep going down to it counts 10, and then the 10 counts from, and this becomes 0, then it still counts 9, 8, blah 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 to 0, 0, 0. If it counts 0, 0, it means it has counted 100 downward. What will become of this number 6?
5.
5. Beautiful. You're getting it. And I believe that we all are catching it. Then, if it goes upward, it simply means that this would soon become 700. Beautiful. Then, we see that 99 pips would not affect a count in the cents, but 100. So once it counts 100, it changes. Now if it counts, and this becomes 9, let's say this now has become 9. I will raise this. When this cent, the smallest part of the cent, becomes 9, and then it moves again to 0 upward, what would this become?
4.
40. Beautiful. So we have 40 cents as we go. And this would take note of, as this thing is counting, I will still say something now. Now let's look at how this one is affected. So this would also count, this would wait for this to count, and then it becomes 99. So this would count, and it then affects this to 100. So we now have this as 0, 0. What would this become? Upward.
2.
Beautiful. So we now have $2.00 based on the count upward. Now, you see this aboki on the road exchanging dollars. They are doing Forex, which is foreign exchange. So before they make money, they are making money. They are getting their own profit from the rechange of the dollar value. For instance, they bought at, maybe when this thing was $1.36, and now they are waiting for it to become $2 change before they will now have to maybe sell in 1,000 places. Then they count that how many cents here. If we check 36 minus this will be around 40 or 60 something, maybe 64. I think this will be 64 change, 64 cents. Affect something like that changed here. Now if they sell this by, they change 1,000 euro to dollars for somebody, they now made $64 cents times 1,000. Their profit will be around let's see, just to check, that 0.64 times 1,000 euro, which they changed, they made 640 dollars. Hope I'm right with that. $640. Let's just leave it at that. Now, instead of you waiting to do that thing physically, to make that exchange on the actual change of a currency, you are making it as a forex trader digitally from the PIP. Your change comes from the PIP. If you go sit on the chart now, you watch, see this thing changed from here to here. Dollar didn't change. It's still 136. Do you see it?
Yeah.
If you still go down, you see that it's still 136. So this market could change all today. It can play throughout today. Nothing shifted from the market. In the real world market, they are waiting. They are just still seeing that this thing they bought, their bookie is still looking at it that dollar is still against euro at, or euro to dollar is still, no, how do I put it now? Euro is still exchanging. 1 euro is still $1.36 since yesterday. Oh, let this thing appreciate. Make my money no depreciate too. But you in the forex market, this little change happening here, you are making massive profit or loss. So now I will talk about I don't know if you have any question around these things I just shared. You're not confused, right? Are you? If you are,
No, I'm not confused.
Good. All right. So let's look at the spread. The spread is the difference between the bid price and the ask price.
Sorry. The spread is
the difference between the bid price and the ask price. So my people in the house, we are looking at terminologies in forex. Number 1, PIP. Number 2, pipet. Number 3, spread. So these are language in forex that you need to understand so that you'll be able to communicate as a trader in forex. Okay, so the spread is the difference between the bid price and the ask price. So the question is, which one be the bid price, which one be the ask price? So maybe we'll
the ask price, Abi.
Yeah.
Ask price. Okay.
Difference between the bid price
and the ask price.
Yes. So we can define the bid price as the price at which
okay, we should take the
let's
bid
take the
price
bid price
now.
at once. Yes, the price at which the broker, your broker, yes, I explained broker, but we'll still go to broker in the terms. We've already written it down. The bid is the price at which the broker will buy a specific currency from you. The ask is the price at which the market, or rather the broker.
You said the price at which the broker will buy specific currency from you.
Yes.
And the ask
is the price which the broker will sell for you or sell to you.
Right. Is the price the broker will sell to you?
Will sell to you. Yes. Now, let's go see the spread and they ask. Okay. You can see your screen?
Yeah.
Good. Now, they ask. You see this red and green. You see something here?
Yeah.
Green box, yeah.
Yeah.
The red
Can
box.
you zoom this?
Okay. Let's see if I can still zoom more.
Yeah.
Okay. So you always see that on your chart, and it's what prints your candlestick. The current price position. And
sorry, what's the meaning of that candlestick?
These things. Okay. I think I've not been mentioning. Okay, you can still go write the candlestick as a term, which
that
now
becomes
you've known
number
it.
20.
Yes. Very 20. Good. So
Candlestick.
Exactly. Candlestick. And if you look at it, it has a body and a wick, just like a candle. A wick. The wick is that tiny part, and the body is the fuller part of it. All right. So the bid line is this.
Okay, the red line.
Yeah, and then they ask is this. The red is the sell and the green is the buy. Let's go check our definition again, because that thing can confuse somebody. We say the bid is the price at which you buy. The ask which you sell. So the ask is the red. The green is the buy. Okay.
Can I just put it? Okay, the green line is to buy, the red line is to sell.
Good.
Can I?
Just
for a better understanding.
Excellent.
Okay, the red line
is the sell line.
It's to.
Okay. Don't ask you to understand that.
It's to sell. Why? Sorry,
Yeah, well.
Why the green line is to buy.
Good.
I got that.
Yeah. Okay. So when you go back to your chart, have you clicked the buy and sell? Have you taken any trade on your demo?
No, I've not taken it.
Okay.
But I have just gallivanted through
the app. Great.
Yes.
So when you take buy and you take sell, watch this line. Either of them will activate that trade. If it's a buy trade, it's the green line. You will see your order placed from there. If you take a sell, you will see that it is the buy, that it is the red line that takes your order. So however you find it, just know that it's confusing at times. So it could be that when you take, because I don't really look at it, so just that I know it, but I don't look at which one. So when you, let's assume that it's the green that activated your order. It's the opposite.
Okay.
It's the opposite that does that. Now, when you take an order here, automatically it's a sell order, but it activated underneath your red line. So your trade will always start in loss.
Okay.
You can't take a trade and you just see profits. No. It will take a loss, because it will now take for this red line to cross downward over your order line before you make profit.
Okay.
So if you take a sell and the red line activates it means you just need to shift down just very bit, and then you're already in profit. So look out for this. You would see that play out. Okay. Then when you take a buy, the red line is what activates the order, and then the green must cross over before you make a profit. So you can take it, and from there just continue to go down, and then you are in loss. All right. So I believe this is helpful, and it's just 2 minutes to 5. will not.
Very, very helpful.
Yeah.
Very.
So from this, I believe you have got good understanding of some very basic and important parts of Forex. I would not want to